the very best of luck to all involved in those startups. Now, the people who contributed to those projects did so out of interest and a desire to see them succeed. But our next story deals with a crowdfunding website that offers investors a return on their money. It's called LinkedFinance, and it's a bit like a dating agency for business because it provides a platform for lenders and borrowers to meet. The lenders compete online to lend. The borrowers must be at least 2 years in business and have a turnover of €100,000. Our reporter Emma McNamara has been meeting the people behind 2 Dublin companies who used LinkedFinance to expand, and they're now paying back their loans.
Olivier van der Elst is from Belgium, and he wanted to bring Europe's passion for cycling to Ireland. This passion is for electric bikes. And they're growing in popularity here, with families who want just one car or commuters who want to be certain of their daily journey time.
We appeal quite a lot to commuters. The last commuter that we had was yesterday. He does 20 kilometers in, 20 kilometers out. And he needs to have an element of control on the time that it takes to get to work. He wants to cut on the cost of commuting. He's already a cyclist, but he knows that the electric bike will allow him to go at a steady speed and not be sweating bucket loads by the time he gets to work. So that's a perfect example of a distance that is otherwise a bit daunting, especially if you have a headwind or a steep hill on your way back. And psychologically, you know that with the electric bike, you'll manage. But I think electric bikes are inclusive. It's about putting more people on 2 wheels rather than keeping them in their cars or in other means of transport. And at the end of the day, it's about the amount of use that you get out of your bike. It's no good to just have a bike that, as I said, sits in a garage.
Green Air's bikes are made by some of the best-known European brands, Bear and Kolkoff.
They're not cheap. The capital cost is between €1,450 and upwards of €3,500 to €4,000. Just like any high-spec bikes, we have full suspension mountain bikes that you can take off a cliff if you want, and then very fast electric bikes. So you have the full spectrum. You have a battery that's capable of 200 kilometers of range, so that exceeds what you needed to do on a daily basis. And at the same time, it's light enough to be cycled on its own if you do happen to be stuck.
Olivier's company raised money to buy a fleet of electric bikes for rental through LinkedFinance. This links firms that need money with lenders who compete with each other to give the most favourable loans. A typical loan is made up by 180 lenders, and the average loan size is €30,000. At interest rates of 8 to 9%, that beats the banks for both parties.
LinkedFinance approached us with the idea of the loan and the peer-to-peer funding, and we straight away were very interested. We've had an okay relationship with the bank over the years. It's never been particularly exciting to go to the bank for a loan, and we wanted to have a fleet of bikes that we could use to rent out so that people, instead of seeing what electric bikes do on paper, would be able to try them in their own context and see how suitable the solution was to their own requirements. That was the reason why we went out to seek a loan of €15,000, and the process was fantastic from the get-go. LinkedFinance vets you as a company, so they check your financials and all of that, and then after that your loan is published online, and you have to do a bit of communication yourself. So we spread the word through social medias and to our customers, existing and future and past, and to say, look, if you want to be part of the Green Air story, don't hesitate to lend us a bit of money. You'll get your money back plus interest every month for 3 years. And a lot of people were seduced by that idea. And so it's completely the reversed system to going to the bank. Here you just go public. You try to make as much noise as you can, and you find that there's a lot of goodwill in Ireland for people to support small businesses, especially those that they're familiar with or have an interaction with, and they don't know. Sometimes they wonder if they can help because they want to see that business grow and be there in the future, and LinkedFinance is a fantastic platform for those.
Ian Conway raised €30,000 for expansion and opening a new sushi restaurant through LinkedFinance. He got his loan in just a couple of weeks.
We were looking for quite a while for our premises, and last year we came across 51 South William Street. So we had a meeting with LinkedFinance and they launched our loan and we got 126 lenders and we raised capital to put this together. We had enough finance to set it up, but we just needed some backup finance, like every business, just some extra in case, you know, times are slow or it takes a while for the business to generate some cash. So when we met with them, I think it took in around 2 weeks to get all the loans. It was relatively painless, and the great thing about it is that the 126 lenders are now our customers. So the meaning of linked is that everybody's linked together, so they're now essentially our customers as well as supporting us financially.
LinkedFinance hopes to have facilitated loans to 300 small companies by next March. In Ian's case, his loan came at just the right time. We've been able to update our kitchen. We've quite a lot of expensive equipment up there, like Japanese robots that help us make the sushi, and refrigeration. Obviously, a lot of money went towards the decor of our new shop in 51 South William Street. I'm up at 5 o'clock every morning preparing the fish, and then usually I get down to the shops around 10 o'clock. Ian believes in the healthy approach of Japanese food culture and travels to Japan regularly for research and shopping.
In 2009 we opened up the first Kokoro on 19 Lower Liffey Street. It became very popular and thankfully very busy, so we had to sort of expand and open up a kitchen. So we set up a kitchen in the Liffey Trust Centre, which now can cater up to, I'd say, 6 outlets. I think what we were missing was a healthy kind of alternative to fast food, and that's what I'm trying to create here. We're using Japanese products. So you can come in here, as opposed to getting a kebab or your usual takeaway food, you can come in here and just pick and mix your sushi, and you can spend 3 to 5, 10 euro. It's all very affordable and user customer friendly. When we opened up, we were probably in the height of a recession, and people would say you're a bit crazy opening up, but we came through it, and the people who are good operators and survive during them times, I think, will thrive in the next few years.
These borrowers have had a good experience that's not all about raising money. It's like a community and keeps them in touch with customers in a whole new way.
It's very transparent as an approach, so you have to be happy that everybody sees what you're doing, but that's part of our ethos. So I think it's, for any company that has a strong interaction with customers, it's something that's worth considering. And again, a much more pleasant approach to finance than the traditional banking route.
Well, that's LinkedFinance. Now, we're going to take a break, but when we come back, we will be hearing about a nutritional food company that's based in Waterford and that also raised money through LinkedFinance. As well as that, we'll be getting advice for people who are thinking of investing their money through a crowdfunding website. We'll talk to you again in a couple of minutes. You're welcome back to Nationwide. Small and medium-sized enterprises are considered to be the backbone of the Irish economy, but they were hit very hard during the downturn. And for those wanting to expand, well, getting finance was particularly difficult. We've got a story for you now about a County Waterford-based company that got around this problem by sourcing funds from LinkedFinance. And this allowed Chiabia in Tramore to buy the equipment that was necessary to make their business viable. Now they are winning awards, they are expanding their company, and they are growing their workforce. And Helen McInerney has their story.
The recession was just kicking in when the owners of Chiabia set up in business in Tramore. They import and supply chia seeds and products containing chia to shops all over the country.
The use of chia, it can be used so many ways. It doesn't taste, it doesn't smell, so it doesn't change anything that you're eating. All it does is it increases the nutritional benefit. So whether we put it in bread or we put it in crisps or we put it in cakes, or it's drinks or whatever, it's an amazing product.
They first discovered the chia seeds in America while on holiday, brought it back to Ireland and asked friends to try it out. They then gauged their reaction over a 4 to 6 month period.
We gave it to about 30-40 people in Tramore that we knew had some sort of ailments, from young people to old people, and just waited for the feedback. So we did that for approximately maybe 4 to 6 months, and the feedback was amazing.
Excited by the overwhelmingly positive reaction to the product, they set about importing it into Ireland. Meeting a doctor at a conference in America reinforced their belief in chia seeds.
We met this guy called Dr. Wayne Coates, and he is the guy who actually rediscovered chia in about 1990. So he's basically responsible for chia growing anywhere in the world today. He has sent it out to all these places where it's grown. So we got involved with him, and we brought him to Ireland because we wanted to launch it, and we kind of hit it off with him. So much so now that we're the only company in the world who allowed use his name on our bags. He sources and approves all our chia for us, so we buy directly from the farmers in South America.
When it came to starting up the new business, they decided to locate in the seaside town of Tramore.
We both live in Tramore. Barry's originally from Tramore. I'm not. I'm originally from Meath, but we both live down here, so it was the ideal place to set up.
They found a commercial unit and began the business in 2009.
It slowly progressed. Now, we would have got some help from the likes of the local county enterprise board, who would have helped us with the setup of the offices and that sort of thing. And then we got involved with the likes of Borbia. Borbia were probably fantastic. One of the best, state businesses or companies to get involved with, which really helped us for the last 3-4 years. When we started first, and we went to health food stores and we produced the bag, and they saw the nutritional value on the bag, it was an automatic case. They went, "That's brilliant. If it does whatever it says on the bag, that is a marvelous product."
And was there nobody else bringing it in?
No, I'd say the first people in Europe to bring chia to Ireland, or to bring it to Europe even.
Before they bought their milling machine, they sent the chia seeds from South America to Canada to be milled. Then they were shipped to Ireland.
The old traditional mills can't mill chia because they generate too much heat, and because of the high omega-3 in chia, if you generate too much heat, it just goes gloopy.
But milling machines don't come cheap, and finding €70,000 in a difficult market was a challenge.
At the time, banks didn't want to give small industry money. I suppose you couldn't blame them, but they didn't have money to give, and you were just knocking against the brick wall. So we had to find alternative ways of financing projects or whatever we wanted to do. So this is how we came across LinkedFinance. It's a very simple model. They come, they audit the company, see that you're a viable company, and then they either say yes, we can help you with finance, or not. So if they say yes, basically they put your company up on their website and invite investors to invest in your company up to whatever amount of money that you've asked to look for. Lucky enough, it worked for us, and I think we had about 150% on the application, so there was plenty of excess money there if we wanted to go back again and look, because people were interested in investing in the company. Leader had said they would give us funding. Leader have been very good, so we went back with Leader funding and the LinkedFinance funding, and then the bank said, okay, we can do that.
Buying the milling machine was a game changer for the company.
It reduced our costs. We were able to employ more people. We went from about, I'd say, 7-8 people up to what we have now because of that. So we've created more employment in Tramore, and all the people that we have working for us are from Tramore. So nobody travels any more than probably 2 mile, maybe 3 mile at most.
There's been a great reaction to the product, and Chia Bia are confident they'll grow their workforce as their market share increases.
When you started, nobody knew what Chia Bia was, but now everybody knows. So, and everybody, not just in Tramore, it's getting more known throughout the country and other countries. It's fantastic.
And for those people finding it very hard to get startup finance, Ray would urge them to check out LinkedFinance.
I think it's a great idea. Fantastic. It's a fantastic business model for small companies who are looking for a small amount of money. But it's not one-off. You can go back again, and if people see that you're being successful and they're getting their return on their investment, they'll invest again and again and again.
So there's an example of a company that used LinkedFinance to make their business work. From the company's point of view, it's a success. But what about the risks involved for somebody who might decide to lend money to a company using a crowdfunding website. Well, we're going to have a chat about that with Peter Oakes, who's a regulatory consultant and a former director of the Central Bank. Peter, before we talk about the risks, will you tell us how somebody goes about lending money on a crowdfunding website?
Okay, so what crowdfunding is all about is a collection of people that come together to finance either a project, for example in an impoverished country, or they come together to fund an individual through a personal loan, or they come together to fund a small business loan.
And how do they go about doing that?
Now, they have a number of ways of doing this. Probably right now, because of the way technology is going, the fastest and the easiest way of doing this is by doing it online and finding the right intermediary, the right, what they call funding platform to utilise, and do your research through that funding platform on the businesses or projects or individuals that you're interested in funding.
And what about the returns? Are the returns good on that kind of an investment compared, say, to other ways that you might, invest your money?
Yeah, well, this is the whole reason why crowdfunding has taken off in the last number of years, because the returns from banks and other forms of investments have been quite low in terms of returns. So what happens with these sorts of returns is that the borrower will nominate how much they're prepared to lend at, and the lender will stipulate how much they're willing to lend at as well. And somewhere in the middle, the market will work and an effective rate of interest will come about.
Now, the Central Bank issued a notice recently, didn't they, kind of warning people about the risks involved?
Yes, they did. They set out a notice explaining what crowdfunding is all about and what investors need to think about. And so did other regulators across Europe. And they've all come down on the side of saying that if this is something that you can afford and it fits in part of your investment portfolio, then when you undertake it, be aware of the risk. Be aware that it's unregulated, be aware that it's not covered by the compensation scheme, and be aware of the fact that if the borrower cannot repay the money, just like a bank, you may not see your money come back to you at the end of the day.
Do you think it's a good idea?
Well, it's not just me that thinks it's a good idea. Governments around the world are backing this as an idea. The UK government will actively put money into crowdfunding ventures if it attains the right level of interest from other investors. And this is a growing market. Google has invested in this, for example. So I think this is just the way of the future. I don't think it's going to replace bank financing, but it's certainly going to be an alternative source of financing for many borrowers out there.
It's also nice to be giving people a bit of a leg up who can't get money from banks.
Yes, and there's lots of examples out there, small businesses getting loans to start up, small businesses getting capital to new kitchens in cafes, and I even read one recently about a winery in the United Kingdom that sourced its investment from crowdfunding platforms. So people will be raising a glass of wine at some point in the future knowing that they participated in that vineyard and that particular vintage. I think on the one hand, you're doing a good thing, two, if you can afford it, and three, you're prepared to take the risk. Overall, it sounds like it's a good idea, but again, it comes down to your personal circumstances. And if you're ever concerned about something like this, always take financial advice.
There's no doubt about it, it's a whole new world of financing out there. It's growing and it's set to grow further in the years ahead. We've come to the end of this evening's programme. If you'd like to find out any more about the stories that we covered, you can go to our website. From all of us on the team at the Stephen Green Centre in Dublin, Ihuagwif agus Kadeshiv Slán.